Hey, it's Clay Trader, and this will be a video chart on ticker symbol ARIA. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this may look like several days worth of time right here, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think it does a good job of telling the quote-unquote story of the price. And in this situation, makes mapping out a very logical question quite straightforward. And the question revolves around the fact that, yeah, today was brutal. It gapped down, and then the price got hit. But to give credit where credit's due, the price did ultimately have a good, strong afternoon as the price started to bounce. But that brings up the question, but is there any sort of true power behind this bounce? Is there any sort of genuine strength? Or is this just some sort of knee-jerk reaction, dead cat bounce, or in other words, a fake bounce? I have no idea, but like I said, by using charts, we can make answering that question very straightforward. And in my mind, it all revolves around a single level, and that's why I love charts, makes things very straightforward. And that level is right here at $12.50. Why is $12.50 so important? Well, hopefully we can all agree on the logic that bounces that are truly strong, bounces that are genuine, bounces, are going to continue to make progress forward. They're not going to go back to where they were. I'm assuming you're saying, hey, thanks, Captain Obvious. Of course, if a price movement is truly strong, it's not going to go back to where it was. So with that in mind, think about $12.50. Any sort of closes below it, or worse yet, if the price separates to the downside, what is that doing? Well, that's just simply putting the price right back to this range where it already was, down at the lows of today. Again, going back to ranges where you already were, not a sign of true strength. Whereas let's say the price pulls back, bounces around here, and then heads back up. What would you have in this perspective? You'd have a set of lows right here. You'd have a set of lows down there. If you picture each one of those as stair steps, well, hey, now you have stair steps progressing in the upwards direction. And that's what a bounce is going to do, right? Bounces are going to continue to, bounce, make progress in the upwards direction. So to me, 1250, very important level. In regards to levels of resistance, quite straightforward. At this point in time, it's all about the purple line up there, which is the 50-period simple moving average. I realize that may seem kind of far away, but keyword there being moving average. So if the price does continue to work its way back upwards, very curious to see how the price reacts when it gets up around that purple line. So again, 50-period simple moving average, initial area of resistance. So all in all, interesting late day action, good solid bounce that's occurred. Now it's just a question of, can the bounce keep on bouncing? We'll see what happens. One of the most popular questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.